and Nima's going to introduce Anthony.
What do you want to stand? I don't mind.
And just to warn you, Nima, if you are sitting, you can't see the timer for the flowers. Very beautiful flowers.
High-tech phone to see what the time is then.
Right. Okay.
Right, thank you very much
Over
indeed.
to you.
So, ladies and gentlemen, thank you for coming back. If you wish to sit, we can sit. I'll stand for this bit.
Oh,
So-
very comfortable chairs.
Is the financial crisis really over? Who says yes? Raise your hands. Is the financial crisis over? Yes. 2. Anybody else? 3, 4. But you have to hope for that because you represent Lebanon. So. I know
how it's over.
Do you? Okay.
I know the details.
If you need to know any more, please talk to the gentleman over here. Right. Now, I'm asking this because, in fact, the knock-on effect from the financial crisis really is still affecting your industry, isn't it? But also, PwC puts out something called the Banana Skins Report, and it is now saying that it's over. You can breathe a sigh of relief. Things are really fundamentally changing. Personally, I disagree with that. Personally, I think things like regulation are still stifling your industry. I believe that you still have a long way to go when it comes to going back to your basics, which is what? What is it? Is it about ticking boxes and compliance? Or is it about actually moving money around in a reasonable way, allowing people to grow their businesses, buy their homes, and so on? Please, I do encourage you to raise your hand during this session so we have more of a dialogue instead of just us talking to each other on the stage. If you have questions at any time, raise your hand, and I'm sure that there is somebody with a microphone on the floor. Are there any microphones on the floor? Yes or no? Yes, we do have a microphone. That is fantastic. And now, please, Anthony Brown, Chief Executive Officer of British Bankers Association in the UK, thank you for being here. My question to you is it over?
Very good question, very pertinent question. I'd like to say thank you to the UAE Bankers Federation, one of the global associations of banking federations, for holding this conference and inviting me. Clearly, after the global financial crisis, there was a need for massive reform and regulation, and to make sure the crisis didn't happen again. And that was the whole G20 agenda pushed through by the Financial Stability Board in terms of improving capital levels, liquidity management, recovery and resolution planning for banks. And it's not ended, it's still there, it's being implemented now. We're getting to the tail end of that agenda. The FSB, Financial Stability Board, is now looking more at conduct issues, and that's after conduct scandals in foreign exchange markets, for example. But it is very important that we start looking forward more. And this is our message to the UK government and other international governments that we've been speaking to, is we can't spend our whole time just looking back to the financial crisis. Clearly, we needed reforms to make sure it doesn't happen again. But at some point, we have to start looking forward and saying, what sort of banking industry do we actually want? And we are actually in a situation now where the bank boards of the global banks spend more than half their time talking about regulation and compliance. And it's not sustainable for businesses to spend that amount of time talking about regulation rather than actually running their businesses. And
from what I understand, I mean, this is months old, but banks here were happy not to be making more money. Their big push was compliance, actually. You know, it's a big regulatory compliance issue and so on. So it's eating into a lot of aspects of banking. Do you have it right? Do you have the right amount of regulation now? Isn't it still stifling? There is a phase when you're introducing new regulations of implementation, and that takes an awful lot of time to change the way banks do business, to train people up, to get them to the right level of knowledge in terms of the processes, how they're meant to work. So there's clearly more work there that needs doing, and that is what the boards are spending their time thinking about at the moment. The question is, once you've implemented all that, do we have the right level of regulation and legislation for banks? And there are, I see my job as making sure that the regulatory pendulum swings and stops in the right place, as it were. It's clearly, after a crisis, the normal pattern is that the regulatory pendulum swings too far, and then after a while people say, we've gone too far, we've done too much, we need to go back. We need to make sure it stops in the right place. And there are some things where I think regulation has probably gone a bit too far, and there have been sort of concerns amongst the industry about it going too far. And we've actually Can you share them?
Yeah, well, the British Bank Association, we represent London as an international banking centre. We'd argue one of the world's leading international banking centres. In fact, 2/3 of our members are foreign banks. And we spend a lot of time thinking about the competitiveness of London as an international banking centre, make sure it's a good place to do business. And we published a report on Friday, the result of nearly a year's work, looking at all the regulations and how they impact the attractiveness of London as a place for international banks to do business. And we did this because we found a lot of banks had started moving jobs away from London elsewhere, or they'd decided not to move jobs to London, a lot of international banks. And in fact, we did a straw poll of our international members and found that the majority of them, more than 2/3, had actually moved jobs away from London in the last year.
Specifically because of over-regulation?
Because of remuneration regulation, for example, that's more burdensome in London than elsewhere, because of some of the conduct regulation that's more burdensome in the UK and elsewhere. There's concern about a senior managers regime, which is a new regime being brought into the UK. Certainly totally support the principles of it, but it's the way that it's implemented that it could be really over-constricting. But also, and concerns about things like liquidity reporting, some quite technical things. Also, big concern about tax. Now, this is a particularly UK thing, obviously, it's a national issue, but the British government has a big budget deficit. Completely understand they need to balance the budget. But we've had 5 bank-only taxes introduced in the last 5 years that will raise £40 billion extra taxation of banks over a decade. And a lot of banks have said it's just too expensive to operate in London, let's operate elsewhere. But the good thing from the UK point of view is the British government is listening, they do understand that issue, and they are keen to make sure that London does remain competitive.
Can I just make sure, can you hear us clearly? Super News. Any questions from the floor so far? Yes, please. Can we have a microphone?
Hello, my name is Harut Samuelian. I'm from the Central Bank of Lebanon. I'm a regulator, and I've been a commercial and investment banker before. Now, when I say the crisis is over, if we have a look at the crisis, we will see the reasons of the crisis being securitization and all those issues that created the financial meltdown have been taken care of, solved through Dodd-Frank, Volcker's Rule, etc., etc. But saying that, we shouldn't say that the crisis is over and we just sleep over it. The banking industry is innovating, new products are being introduced like Bitcoin and things like that. Things are not to be left as they are, so that we will have another crisis based on the new financial or digital creations. This is why I would say that this is an ongoing process and it has to continue on. The regulations have to be updated, and with that we might avoid another crisis.
But I suppose what you're saying is that there are two different things going on. You've got the financial crisis, the over-exuberance, the credit and all the rest of it that led to what happened to 2008 and so on. And then there's the issue of other risks coming into play, things like high-tech and digital risk and that sort of thing. So these are two different things. So really what you're saying is the financial crisis and the knock-on effect, that is over, but there are other risks that are increasing.
So this is a very, very important point. It's a message we keep making to regulators and government authorities around the world as well, is that we know clearly we need to make sure the crisis that happened before doesn't happen again. But one thing we can be really confident of is the next crisis will be completely different from the previous crisis. And the industry is changing massively. We've been talking all morning about the digital revolution, and that is a really fundamental change in the industry, not just in the ways banks deliver services like mobile phone banking, which has been a lot of the topic of conversation, has revolutionized banking in the UK, but things like blockchain technologies, which are transforming or on the brink of transforming wholesale markets. And one of our messages to regulators has been to try and future-proof regulation. Don't just think about problems that happened in the past, but try and anticipate problems that might happen in the future. It's difficult to do, but I'll just give you one example. It's a very very UK example, but it's it was a very big political row we had over the last few years in the UK. Payday lenders are short-term, high-risk, high-interest lenders that lend to people over a period of up to 30 days. They've existed for 1,000 years. When people walked door to door, they were always limited scale. They then discovered the internet, in particular a firm called Wonga in the UK, and they exploded. And a lot of people took out a very high, short-term, very high interest rate debts. Now, banks are required by law in the UK only to lend to people they know can repay the debts. They have to check, can you repay the debt before lending money? The payday lenders weren't regulated like that, and they could exploit huge demand for debt that we had in the UK. And it ended up with a huge number of people being massively indebted without being able to pay off the debts. And everyone said, oh dear, you better regulate them like the banks. And so they got brought in under the same sort of regulation as the banks, and 90% of the industry was wiped out. But it was really, it was the combination of the digital revolution on lending and the access to new markets and the conduct arbitrage, regulation arbitrage, that led to this explosion of unpayable debt.
But
and our message to regulators is try and think ahead, try and think what the problems could be in future.
But could it also be, about the bank's remit? So what is your service to society? That's part of the equation as well. So if banks were enabling people to be able to, access certain funding opportunities, they wouldn't have turned to Wonga.
They are, but so absolutely banks have a very fundamental role in helping people buy their houses and helping people, companies borrow money for investment, etc.
So my point is that over-regulation is killing that in the banking sector.
Banks also have a responsibility to make sure that people don't build up debt they can't afford to repay. And no one, certainly in the UK, there's a big, and I think in most of in Europe and North America, there's a big consensus about that. So you need regulation to make sure that people don't build up unsustainable debts. And I don't think there's any question mark about that.
So you are a firm advocate of the level of regulation that exists at the moment and that it's fine?
I think that there's one issue about digital banking. So there's a lot of issues about digital banking, but when it comes to regulation. So Bill Gates said, we all need banking, we don't need banks. And we've been discussing all morning the sort of services that could be provided by digital, whether they're startups or sort of mainstream players, banking services that could be provided for them that banks don't provide. We talked a bit about this morning about alternative sources of finance such as peer-to-peer lending, for example. There's a lot of payments providers that are from technology companies that aren't operated by banks or done in partnership with banks. And the question is whether consumers have the same level of protection if they or have the right to expect the same level of protection, whether they're interacting with a bank or an entity that has a banking license, or interacting with a technology company that doesn't have a banking license, and whether investors, for example, small investors, have the same right to protection interacting with a technology company as they do interacting with an entity that has a banking license. And our argument would be that consumers have the right to expect the same sort of protection. And small investors have the right to the same level of protection, whether they're dealing with a bank or with a technology firm. But you've got to make sure that the regulation, where the regulators in the room, it's done in a way that offers that consumer protection without stifling innovation and without stifling competition. It's a very difficult balance to get right. But what you don't want is have a whole load of regulatory arbitrage where misconduct and risk, as it were, is squeezed out of the banking sector, goes into other sectors where customers would end up losing out.
So a question to the floor. Are your banks able to lend money to people who perhaps you believe can pay it back? I mean, at the end of the day, everybody here has a job, right? Otherwise, we wouldn't be residing in this country by default. So are your banks able to lend money, or are they being prevented from doing this? And so you have a surplus of cash sitting there doing nothing. Do you have a surplus of cash sitting there doing pretty much nothing because of over-regulation? Yes, raise your hand. Wow, okay, they say no. And I bring this up because, in fact, I spoke to a few mortgage brokers before this session, asking them, what's the market like? Why do people come to you? Because it's very difficult, of course, going to lots of different banks and so on. But what they said to me is this. They said, you know what? We make life easy, yes, but also we know which banks to go to for that one loan that they're allowed to make per month, I think it is, because of the extra cash that they haven't been able to loan out in traditional mortgages because of the over-regulation. So do you hear what I'm saying? I'm being told by mortgage brokers in this country that they know which banks to go to access a lump sum of money. The criteria being that it has to be a big loan because they only get to do it once a month. Are you surprised by this?
Yeah, we don't have that in the UK. I have to say, more globally, so I sit on the board of the International Banking Federation, which is the global association for banking associations. And the Basel capital rules that have been raised steadily over since 2007, and quite rightly in many ways. But it is one of the big concerns for the banks is they don't know where prudential regulation is going to end. There's more proposals all the time. There's been a lot more this year, all of which point to higher capital levels. So banks don't know how much capital they're going to have. But it has a particularly strong impact in emerging markets. And I know in places like India and South Africa and other countries, they're very worried that the capital regulations are doing exactly what you say, that actually they're making it more difficult for them to lend to households and to businesses. So banks certainly in the UK and in Europe and North America have been building up their capital levels really quite rapidly since the global financial crisis. In the UK, banks have got about 3 times as much capital as they had in 2007, the core equity tier 1 capital. And that's is as it should be, but it hasn't really been at the moment sort of hindering on, it hasn't really stopped them lending at the moment.
Risks. That's really what we're talking about. What are the risks that you are worried about? Any hands up? Risks in your banking sector, in your bank specifically? Nothing? Digital risk on the increase.
Well, digital is...
Can I share one story, sorry, just very briefly? You are looking at the very recent victim of digital cybercrime. Yesterday, I was trying to book a ticket online, and I couldn't because my credit card had been blocked, and it had been physically swiped in the US yesterday morning, all right? So this is my first time, and my point is, it's great to talk about all these high-tech solutions, but we've really got to go back to basics. You know, if I'm sitting here in Dubai and my card has just been used in the US and now I have been penalized because I couldn't buy the ticket, it's a whole knock-on effect.
So, no,
Where do you go
very
from
important
there?
issue. So digital as a whole, I mean, it's, as you heard this morning, it's a threat and an opportunity. I mean, it's a huge opportunity for banks to improve the services to customers. So in the UK, for example, the mobile phone banking has been absolutely growing exponentially over the last few years. And mobile phone banking this year has now overtaken all other forms of banking as the most popular way to interact with your bank. So more people contact their bank through their mobile phone than do online on computers or telephone or visiting branches. And we reckon in about 2 years' time, mobile phone banking will have overtaken all other forms of banking together. And that is because of customer demand. People want it. Digital is also, there's lots of other opportunities with digital. So one thing you didn't really talk about this morning was big data. It's a thing that a lot of the banks are starting to think about in the UK and I know in North America, which is how banks have got more information about people's data than any other institutions. They never use that data, and obviously it's very important from a privacy point of view that anything that's done is done with the full agreement of any customers. But there is a line of argument, and it's actually being pushed by consumer groups in the UK. The banks could do far more with that data to help customers get better services. So, for example, if a bank knows that you are spending more on building insurance than anybody else in your street, wouldn't you want them to let you know that you're doing that? Or if you're spending, if you spend a lot of money on restaurants, for example, and they can tell that, would you want them to give you more information about good deals on restaurants? And that's the sort of debate that's going on in the UK at the moment. There are threats, though, and one is threats to the business models of banks, and that's really the point of the discussion earlier, that actually if the banks don't take advantage of the new technologies of fintech and blockchain technologies and everything else, there's a risk that they could end up really losing huge amounts of their business. I don't think they'll be like Kodak and sort of put out of business, but it could be really severely damaging for them as businesses. But another threat is the one that you talked about, which is cybercrime, and that is a huge issue for banks, and it's a huge issue for industry generally, but it's one that banks are spending a lot of time thinking about. And we and the BBA, we monitor all the financial crime statistics and report them to the police authorities. And the good news is that armed robberies have basically disappeared. We've had the first case of, in Scotland last year, there wasn't a single armed robbery. It's just people do not go into banks with guns and take cash anymore. It just doesn't happen. And the armed robberies in the UK as a whole are down something like 95%. What people are focusing on, the criminals, the organised criminals, and they are very organised, and it is global, is cybercrime. And there's two different elements to that. One is cyber attacks against institutions, so going directly against a bank and trying to, and an investment bank, and trying to disrupt their technology, trying to get inside there, or it's simply copying, it's more cyber-enabled crime, using people's credit card details that they got somewhere else. And the banks are, on that second part, the thing that you're a victim of, the banks have been spending huge amounts of money improving the technology for that, getting what they call dual authentication. It can be cumbersome for individuals using it. You actually have to prove extra details every time you do it. You might get a little code thing that you have to use separately at home. But it has helped contain that cyber-enabled fraud. Clearly more could be done. It is an arms race between the banks and the criminals. But there have been, in the last few weeks, there have been a couple of very high-profile cyber attacks against companies in the UK, like one, a telecoms company called TalkTalk, which is one of the main telecoms providers. All the customer details, and or quite a large number of customer details and financial details were taken by cyber criminals, and the banks are worried that could happen to them. So if you think what keeps banks awake at night, it's making sure they don't get those cyber attacks against them as organisations, and they are spending a lot of money on it.
Any questions from the floor? We're fast running out of time. In fact, I think we have run out of time. We've got one more minute. Any questions from yes, please, at the back. One question over there, and then the gentleman. But first, the lady right at the back.
Hi, Alicia Kajerski. I'm at Deloitte now, but I used to be at the Bank of England for many years, and I agree with you about the London regulations. They are definitely a different market, though, than we have here. How do you feel that this translates to the Middle East? Because here the regulations are really not the same as they are in the UK. Conduct regulations are not nearly as developed, and how do we sort of get this market up to the right level, and what would you suggest for it?
Well, thank you. That's a very, very good point. So we like to say in London that we flatter ourselves. We like to set the gold standard for regulations globally and set ourselves very high standards, both on the prudential side and on the conduct side that you mentioned. And I know we, as a trade association, but more importantly the UK authorities, some of the Bank of England and the Financial Conduct Authority, do talk to other regulators around the world about what we do in the UK. And obviously we're always delighted when other authorities around the world follow what the UK does. The reason why conduct regulation in the UK has why the standards have been raised so much in the last few years is there have been quite a few scandals in the UK, mis-selling scandals, like in particular payment protection insurance was a big one where the banks have paid £25 billion worth of redress over the last few years. And it's making sure that sort of thing doesn't happen again. We clearly needed higher standards. There is then conduct regulation in the wholesale space, and again there have been various scandals in the wholesale space, and making sure those don't happen again. That's about changing the culture within banks. We've got 2 new banking standards boards set up in the UK, one called the Banking Standards Board and one called the FIC Market Standards Board, so it's setting standards of conduct in the fixed income, currencies and commodities markets. And that FIC Market Standards Board is it's been instigated by the Bank of England, by Mark Carney, who's also chair of the Financial Stability Board, and he has put conduct onto the Financial Stability Board agenda to get authorities around the world, and the Bank of England is talking to other regulators around the world to try and make sure we raise standards of conduct in wholesale markets globally. And it's quite an important point, because in the global markets, such as foreign exchange, and there's few markets more global than foreign exchange, it's quite important to make sure that people operate to the same standards around the world, that you don't end up with regulatory arbitrage, that some places with lower standards try and get an advantage because they've got lower standards than elsewhere. It's different in retail conduct regulation, because that's obviously done on a very national basis, but there it is also probably helpful for countries to learn from each other what works and what doesn't work.
And the gentleman, Yes. We've done. I'm afraid, ladies and gentlemen, I'm sure that you're going to be sticking around over lunch.
I will be.
So please do feel free to come up and ask any questions you may have. Thank you very much indeed for your time. Thank you very much for sharing your
Thank you for asking me.
knowledge.
Right.